Hello everyone. So this is 10th of January and our backtest for today is going to be focused on the New York AM session which played out on 9th of January. That's on Friday, the NFP Friday. Okay, so first, like I said previously, before trading the New York session, you have to know the bias for the day. It's very important. It's very important for you to know the bias of the day. Where is price likely to rally to? Okay, where is price run to? Okay, so I'll do quick talk on the daily chart so we can have a clear understanding of the bias for today that played out on the 9th of January. So this is actually the 9th of January. Okay, so you see this move right here, this strong movement, this candle. That's 5th of January on Monday. That was on Monday. Okay, you see this move right here, and you see price trading into what? Into this particular place. So this actually is a BC, BISI. It's a BC. Okay, it's a buy side imbalance, sell side inefficiency. Okay, an imbalance to the buy side and sell side inefficiency, meaning it is inefficient of sell side. It has offered buy side delivery and inefficient of sell side delivery. So that's why the algorithm will want to go into it, okay, to continue the bullish movements. Okay, so this is like a 1 day fair value gap. So some of you probably think this is how it should be drawn. The high of this candle and the low, that's the high of this candle and the low of this. No, since there's a volume imbalance at the top, volume imbalance, the distance between the body of two different candles. Okay, so the body of this candle, if this was where this candle closed and this was where this candle opened, you see this distance, this is the volume imbalance. Okay, and also there's a very large volume imbalance at the bottom of it, which makes this whole thing a suspension block. A suspension block is a CB or a BC with a volume imbalance above and below it, okay, at the top and at the bottom. So I won't label this actually. But you see how price then traded into this suspension block, or let's just call it a CB, a BC, okay, buy side imbalance, sell side inefficiency. But for proper understanding, let's call it a daily fair value gap. Okay, so price rallied up, created this daily fair value gap at the daily time frame, right? Then you traded into it, falling short of trading into the midpoint of it, which signals what? Which signals that price is actually bullish. Okay, so price actually, so on 6th of January, at the close of 6th of January, that was when this daily fair value gap was actually formed. And price traded into it on Wednesday, 7th of January, closed at this point. Then on the 8th of January, that's Thursday, price traded down into it, then closed at this point right here. So if I see something like this, price trading into the fair value gap, price was bullish at this point, and price coming down to trade into the fair value gap, then running away from it and closing outside the fair value gap, above the fair value gap, the daily fair value gap. My bias for the next day will be bullish. Okay, my bias for the next day will be bullish. So if you have your bias for the day before you go into the market session, you are not actually trading blindly. Okay, so let's go to the 15-minute time frame. So the New York AM Q zone is actually from, let's say that it's 8:30 to 12. 8:30 a.m. to 12 p.m. And also remember your time zone should be set at New York. Okay, go to symbol time zone. The time zone should be set as New York to get this right. So let's put this at 8 o'clock. Since I'm actually interested in this rundown in price this week, yeah, this candles week, I'm actually interested in that, and this is just block delay. So 8 o'clock. Now you see this movement in price at 8:30, exactly at 8:30. Price trading below this low and this low. So the idea of the ICT 2022 mentorship is, okay, after knowing your bias for the day, okay, so we know, okay, this bias is bullish. Okay, so if the bias is bullish, price is likely going to do a manipulation before it goes to the main direction of the day, which is bullish, okay, which is upward. Okay, so price is likely going to run down to take out sell side liquidity. Okay, price is going to run down to take out liquidities before going up, or it's going to make a rundown to take, or it's going to run down to imbalance in price. Okay, to take out, to grab liquidity. Okay, to run up. That's how price works. So once you mark your key zone, you look at previous lows that has been created before that key zone. So sometimes price might actually run down to take out lows formed before the key zone. Okay, that's maybe lows formed at the London session. Okay, or sometimes price might actually take out low formed inside the key zone. Okay, so there might be a low right here, and price might actually take out this low. Okay, to rally up. So in this case, price actually took out the lows formed at the London session, okay, of today. This is actually the start of the day, 9th of January, on Friday. And this is actually NFP day. So if you're a trader who lacks experience or you're new, I want to advise you to trade on the NFP day. Even sometimes, most times, I do not trade it. I do not trade it. But that doesn't mean that you can't actually do backtest on it or do a take rate. Okay, so let's go to the 5 minute time frame. Okay, now it's a bit clearer. Okay, it's a bit clear. Okay, you see this run down at 8:30. Price is taking out the low, the price is taking out this low and this low. Price is taking out this low and this low. What's resting between this low and this low? Sell side liquidity. Let's see if there's a low slightly lower than this one. Yeah, there's a low slightly lower. Okay, price didn't take out this low. Okay, so our primary focus is this low and this low. So resting below those lows are sell side liquidity. And you see how the market moved with displacement upward. This is what you want to see. You want to see displacement in price after price takes out this low. While price is coming back up, you want to see a very strong displacement, just like this. Okay, and also price taking out a short-term high. So this validates that, okay, price will likely want to make a run up. Okay, and you see the gap it created, the fair value gap it created, very, it's checking to see if there's a volume imbalance. If there's a volume imbalance created there. So we'll give room for the volume imbalance as well. And you can see the gap very visible. Okay. So since there's a volume imbalance at the bottom, I'll give room for the volume imbalance. as well while drawing the fair value gap. So this is a 5 minutes. This is a 5 minute fair value gap. Okay. And you can see how price then traded into the fair value gap at 850 to value upward. Okay. So let's say we take a trade here. I mean, if we were to take a trade at this point, if you are not really experienced on where to keep your stop loss, because this price run is very, it's a very long price run, it's very large. You understand? And if you are not experienced, you will probably want to put your stop loss right here to hunt for price. Let's say you actually closed the trade maybe at towards this high being created. Okay, you see the risk to reward is not actually, it's not really good. It's 1.46. But for an experienced trader, I will likely go to the 1 minute time frame to set my stop loss. Okay, so on the 1 minute, okay, on the 1 minute, okay, after price took out sell side, it rallied up with displacement and created fair value gaps. This is one and this is one. Okay, so this is one fair value gap and this is the second fair value gap. So I'll probably anticipate price to trade into this first fair value gap. That's the fair value gap at the top. Then I'll give room for price to trade into the second fair value gap, this fair value gap at the bottom. Okay, to be safe, I'll give room for price to trade into it. So this is probably where my stop loss will be. And you see now the trade, the risk to reward is better. That's 2.48 risk to reward. That's better on the first. So quick question: how do you know where price is likely to stop? Where to take your profits? Okay, like if you enter the trade like this, how do you know when to take your profits before price starts declining down? Okay, so to take your profit, you go to higher time frames. You know where to take your profit. You go to higher time frames like the 1 hour, 4 hours, or sometimes even your 15 minute time frame. You can see where you probably likely to take your profit. Okay, so this was where price took out sell side into this up. This was where price took out sell side, and since price has taken out sell side liquidity at this low here, it will probably want to run up to take out what buy side liquidity, and buy side liquidity is found at highs. Okay, so this high right here, or price would want to run up to, or price would want to run up to an imbalance in price. Okay, if there's a big imbalance here, price will want to run up to it. Okay, or an inefficiency in price will want to run up to it. So this buy side liquidity. So let's say you miss this move. This is the 5 minute chart. We're about to the 5 minute chart. So let's say you miss this move, okay, and price is already running up. So there's actually replicants of this price move right here on the 5 minute chart. But some of you might not see it until I point it out. So you see this strong movement right here. Price trading down into this fair value gap the second time. Okay, price trading down into this fair value gap being created, then running up to take out this high. You can see the strong movement in price. This displacement. Okay. And also, price also took out relative equal lows. See this low, see this low, see this low. Price took out these lows. So these are minor sell side liquidity. Adjustment of minor sell side. Okay, now you see clearly. So while price was trading into this, was busy trading into this 5 minute favor leader. Price was also running out liquidities from minor sell side and rallying up. Okay, and also forming another fair value gap, a smaller one, still on the 5 minute time frame. The high of this candle, 945, and the low of this candle, 955. You see how the market works. It's algorithmic. So this is a second fair value gap, which price traded into at 10.05. Okay, and rallied up to take out the buy side liquidity. And then this close. Okay, rallying up to take out the buy side liquidity. All happening when? All happening at the New York AMQ zone. This is the New York AMQ zone. And also remember your chart should be set at New York time zone. Okay. So I hope you found this insightful. And for a complete backtest on gold, click the London session and PM session link on the screen. Have a good one and God bless.